What if I told you that you could significantly boost your credit score in just a matter of weeks? It sounds too good to be true, right? But your credit score, that magic number that decides if you get that dream house, a new car, or even just a credit card, isn't as mysterious as it seems. Most people think it takes years to see any real improvement, but with a few smart strategies, you can see results much faster than you think. In this video, I'm going to break down 5 powerful ways to raise your credit score, starting today. Stick around, because these tips are game changers. First up, let's talk about your credit utilization. This is one of the most important factors in your credit score, and it's also one of the easiest to control. So, what is it? It's simply the percentage of your available credit that you're currently using. For example, if you have a credit card with a $5,000 limit and you've spent $4,000, your credit utilization is a whopping 80%. That's a huge red flag for lenders. Financial experts recommend keeping your utilization below 30%, and if you really want to impress them, aim for under 10%. The fastest way to see a jump in your score. Just pay down your balances. As soon as your new, lower balance is reported to the credit bureaus, you'll see your score start to climb. It's that simple. Next, and this one is a non-negotiable. Never ever miss a payment. Your payment history is the single biggest piece of your credit score puzzle. It accounts for about 35% of your total score. Think of it this way. Lenders want to know if you're reliable. A consistent history of on-time payment shows them you're a low-risk borrower. Even a single late payment can stay on your credit report for up to 7 years and cause a significant drop in your score. The easiest way to avoid this is to set up automatic payments for at least the minimum amount due on all your accounts. You can also set up calendar reminders on your phone. Whatever system works for you, make sure you use it. Protecting your payment history is like protecting the foundation of your financial future. Now, for a common mistake I see people make all the time, closing old credit card accounts. You might think that getting rid of a card you no longer use is good financial hygiene, but it can actually backfire and lower your credit score. Why? Because the length of your credit history matters. Lenders love to see long-standing, well-managed accounts. The older your average account age, the more stable and experienced you appear as a borrower. When you close an old account, you shorten your credit history and you also reduce your total available credit, which can instantly increase your credit utilization ratio. So, unless that old card has a hefty annual fee, it's usually best to keep it open, even if you only use it for a small, occasional purchase to keep it active. The fourth strategy is to be strategic about applying for new credit. Every time you apply for a new loan or a credit card, the lender performs what's called a hard inquiry on your credit report. A single hard inquiry might only dip your score by a few points, but if you apply for several lines of credit in a short period, it looks like you might be in financial trouble. Lenders see this as a sign of desperation, and it can signal that you're a higher risk. This doesn't mean you should never apply for new credit, but it's important to be thoughtful. Space out your applications by at least a few months and only apply for credit when you truly need it. Being patient and selective will protect your score from unnecessary dings. Finally, let's talk about regularly checking your credit report for errors. You'd be surprised how often mistakes pop up. An incorrect late payment, an account that isn't yours, or a wrong credit limit can all be dragging your score down without you even knowing it. You're entitled to a free credit report from each of the 3 major credit bureaus, Experian and TransUnion, every year. Take the time to go through each report carefully. If you find an error, dispute it immediately with the credit bureau. They are legally required to investigate and correct any inaccuracies. Cleaning up your report is like giving your score a fresh start, ensuring it accurately reflects your responsible financial habits. So, there you have it. Your credit score isn't some random number assigned to you. It's a direct reflection of your financial habits. By lowering your credit utilization, making every payment on time, keeping old accounts open, being smart about new applications, and checking your report for errors, you're not just playing a numbers game. You're taking control of your financial destiny. These small, consistent actions will build a stronger credit score over time, opening doors to better interest rates, and incredible financial opportunities. I hope this was helpful. If you've got some value from this video, please give it a like and subscribe for more financial tips. Thanks for watching, and I'll see you in the next one.